Hi, welcome to the channel. I have been uploading series of educational videos to explain the stock market key concepts in an easy to understand manner for beginners as well as experienced investors. Most of the fear around market activities is very common for many of us because we don't understand the real driving force behind the stock market crash and boom. If we understand the strategy behind the market manipulation and how it is executed by big investors, we can align with their actions to become profitable. I'll be revealing market mystery in a simple to understand approach by series of educational videos. You can support the channel by subscribing. Let's turn the market mystery into money. In this video, I will reveal the fact about stock float. How does impacts a particular stock movements? So what is the stock float? The stock float is really the number of shares can buy and sell on the open market. In a daily basis, there is always a transaction happens in a particular stock. We can figure it out how much is the transaction happens a daily chart. Look at this in this chart. What we are looking here is an MCD. It's a McDonald's. What you see at the left side is the volume that happens and starts with a 2.5 million and then the highest is a 20 million. At the bottom you see red and black bars which indicates the volume on a daily basis. And the chart you see here, price actions, white bar and then the red bars. White bar indicates the bull day and red bar indicates the bear day. All these actions happens between the buyer and seller in a particular day based on the stock float. How much is the stock available to do the transactions? So when stock is not available much for the to buy and sell, higher volatility is anticipated. For example, if you have a very less stock available for buy or sell, number of people who wants to do buy will fight for that few stocks available. It's basically the stocks available for buy or sell on any day in an open market. The stock float is the key for any stocks to go up or down. So let us see some key takeaways why the stock float is very much important. Super traders and the big investors are always in competition with other super traders to buy and absorb the available float of the most wanted stock. This creates a high price volatility. You can see in the screen where the price moved very quickly from 70 to $80 to around 135 fast. This high price volatility and stock price goes high quickly when less float in the market, but high demand for the existing float happens. So who controls the floating supply of the stock? And why do stocks have long uptrends and downtrends? Answer for this question is who owns the most of the stock and how the stocks released to the market. It is a change in the quality of the ownership. Who owns the stock? Is it the strong hands holding the majority of the stock or the weak hands holding the stock? Based on that, quality of the holding will be decided. The floating of the supply also will be based on who holds the stock. Is it from the strong hand side or it is the weak hand side? If the ownership quality is very high, the stock will rise even when a small shift in demand. You can see it here from 80 to 135 with a small demand rised very quickly. When it is going high, the ownership will not release those stocks. So that means the float will be still the less and they will hold the stock for higher profit booking due to this available float will create higher price volatility to upper side. If the quality is low, that means the holding of the stock is in weak hands, the stock will be vulnerable. The stock will fall sharply for a small bad news and because no one there to back up the stock going down further, the stock will fall further and will create more float and high supply. So trend of a stock mostly based on who holds the stock and what is the float left in the marketplace. Is it in strong hands or in a weak hands? This is the basic behind stock move happens with speculation to move up and down on a regular basis. At the high level, what you see here is an area where the square box talks about the stock accumulation, which started in year 2022 and almost nearing to an end at the year 2025. And what you see in the green is the uptrend started. What exactly happened over a period from 2022 to 2025 end? The available supply, that means the float, which is systematically observed by smart money people. How do they do it?
exactly playing with the available float of that stock. Once it gets absorbed later in a small demand, the price goes quickly to the upper side. How does the uptrend begin here? If the smart money or the super traders observes, buys, locks up most of the available floating supply of stock, what happened to the price of the stock? Once the stock is in strong hands, available supply will be low and even a slight increase in demand will cause the stock price to jump. The major uptrend begins. You can see here. So, what was the stock manipulation happening during this time? During accumulation, stock manipulation is executed to observe without driving the price up by observing the available float, actually the supply. This manipulation could take months, but large amount of capital were skillfully and quietly deployed at the bottom. This is how observation takes place for remaining floating supply of a stock. Later, once observation completed and no more supply in the market, that means not much float left, this is when the stock moves quickly up, even for a small increase in demand. Because stocks observed by smart money, strong hands, not going to release it until they really see a good amount of profit to be booked. But how does it computed? So there are formulas to do that, but it's an easy way to find out is we can go to free websites like Finviz. I just given a screenshot here. In Finviz, you can see what is the shares outstanding for a particular company and also what is the shares floating availability. It doesn't include shares held by company insiders like officers and directors, restricted shares that are not yet freely tradable. And why it matters? A company's float is an important number for investors because it indicates how many shares are available to be bought and sold, which directly influences stocks liquidity and volatility. Examples of shares that are excluded from the float: shares held by company insiders like officers and directors, shares held on a company's own books, treasury stocks, restricted stock units issued to the employees. How it affects investors? A low float can lead to high volatility and potentially greater price swings. A high float can indicate greater liquidity and stability as there are more shares available for trading. You can see the float of any stock using this free website called finvest.com. Go to the site and type MCD, enter. There you can see the daily chart of MCD. Along with, if you come down, there are multiple information shared here about that particular company's fundamental values. In this, you can see here shares outstanding is 750.20 million. And then the float available for traders and investors is 714.21 million. The 714.21 million shares available for anybody to buy and sell, but actual volume what you see here in this chart is from 5 million to a 20 million. So what happens the remaining 690 million? So this 690 millions is not transacted on a daily basis, invested and held by a strong hands. It will only come outside when it is really a distribution time or when they want to book a profit, or it depends. It's investor strategy. How do they want to play on that particular stock?
Particular stock move towards upward or downward or sideways is influenced by how many stocks left in the market to buy and sell. This is exactly called stock float. What is the availability of the stock to do the trading or investing by means of buy and sell? When higher the stock supply and lesser the demand, naturally stock price will crash. Same way, when less the supply, higher the demand, the stock prices rises. When stock supply and demand is more or less balanced with each other, stock price moves in sideways. So our basic question is, how do I know the current float of the stock? That means how much is the stock available for sell and buy. When you look at the chart for any stock, you will be able to reveal the mystery of its movement and direction by looking at volume and price action. In any time period when volume is above normal range, it is an indication that big investors are entering into the stock. When huge volume plays seen in the chart, it means available stock float increased and changing the hands from strong hands to weak hands or weak hands to strong hands based on the market context. As retailers, we should understand the market context to become profitable and increases the percentage of chances to be successful in the market. Keep watching my videos and support the channel by subscribing it. Please leave your feedback by like or dislike and with a comment. Thank you, and let's be connected in future videos.